Welcome to the Evalesco Healthy, Wealthy and Happy podcast. The information provided on and made available through this video and podcast does not constitute as financial product advice. The information is of general nature only and does not take into account your individual objectives, financial situation or needs. It should not be used, relied upon or treated as a substitute for specific professional advice. We recommend that you obtain your own independent professional advice before making any decisions in relation to your particular requirements or circumstances.
Hello, welcome to the Evalesco Healthy, Wealthy and Happy podcast. My name is Jeff and I'm pleased to be your host today. And today I'm very happy to be joined by Evalesco Financial Advisor Virginia. Welcome back, Virginia.
Thanks for having me.
Today we're talking about the very exciting topic of self-managed super funds, which is a very popular area in Australia. But before we get into that, as we normally start with, Virginia, what have you been doing to stay healthy and happy lately?
Yeah, I'm really enjoying my gym and Pilates routine at the moment. It's really helping me with my headspace and just staying active as well.
Fantastic, good stuff. So as we said, we're talking about self-managed super funds. So to kick it off, as I said, self-managed super funds are very popular in Australia. Why do you think that is? And is there a difference between the perception and the reality around that?
Yeah, I think people in Australia are really excited by the idea of having a self-managed super fund because all they hear about is that you can have more flexibility on how you manage your investments within your super. There's more investment options. So people get really excited by that. But often what they don't realize is that it comes with a lot more management as well. So you really have to understand superannuation laws and tax and all the implications, and you have to make sure you do everything right. And there's a lot more involvement required to make sure you do that. Otherwise it can cause some serious issues.
Yeah, that's right. And it's an interesting one because it is called self-managed, which is very big departure from when you go to a normal public offer or an industry super fund where you've got your own trustee who's running that. So there are the understanding the superannuation rules, tax regulations, the ongoing compliance and the time it takes to do that, which you have to take on yourself.
Yeah, that's right. Because ultimately you're responsible for it yourself, and you're the one who has a problem if something goes wrong. Yeah,
and I think to your point at the start, Aussies have a sense of wanting to be in control.
Yeah.
And there's a sense that when you've got your own self-managed super fund, you can have a little bit more control, which I think to a degree there's some reality to that. But then there are costs associated with that in terms of the time commitment and what you need to understand and work on.
Yeah.
So if you're going to have a self-managed super fund, what do you need to make sure you get right in doing that?
There's a lot of regulations around self-managed super funds, so there's a lot of things to be aware of. So it even starts when you want to set one up. It's getting the structure right. So how do you want to set it up? Do you want to have corporate trustees, individual trustees? What does that mean for you? Making sure you're doing your tax returns regularly, so you have accountants involved with that, making sure you comply with all the laws, record keeping purposes, all of that. And then another point that's really important is you have to actually have a detailed investment strategy for your self-managed super fund. So making sure you have that in place as well is really important.
Yeah. And I think even before all of that, it's understanding, why do you want to have a self-managed super fund and making sure that's right for you, isn't it? So understanding, what goes into it and why it might be the right thing for you and how it might be better than what you've currently got, because that's ultimately what you want to be achieving, isn't it?
Yeah, that's right. We want to make sure, or you will want to make sure that it actually fits your benefits and what you're looking to achieve with it, because otherwise you maybe just set this up for no reason. Yeah.
What's a good reason to set one up? When does it make sense? Any examples of when it might make sense to have a self-managed super fund?
Yeah, a good example that I like to share sometimes is, so say for example you're a self-employed person. So you run your own business and that business needs business premises. So you want to rent a commercial space for your business. So an option there is that you can use the money that you have in your self-managed super fund, so your retirement savings, and actually go out and purchase a commercial property with it. And then what you do is your business then rents that commercial property from your self-managed super fund essentially. So the benefit of that is that, one, all the rent that you're paying or that your business is paying goes into your own superannuation savings. So it helps you grow your balance. So you're not technically wasting any money in rent because it directly benefits you later on. And then also the rent that you're paying is only taxed at 15% within the superannuation environment. Whereas, for example, if you would hold that property in your personal name and still do the similar strategy, then you pay tax on the rent that you're receiving at your marginal tax rate, which is always higher. And I mean, you're cutting out a middleman as well. And also, if you hold that property all the way until retirement and then you sell it when you're in what's called a pension phase, you actually have the option to sell it tax-free. There's no capital gains on that, which is a really great benefit as well.
Yeah, fantastic. That's a great example. And I think it sort of really highlights that getting an understanding of why a self-managed super fund might make sense is a much harder conversation and deeper thought process than maybe in previous times. I think, when we started out talking about self-managed super funds, a lot of the public offer funds didn't have as many investment options and didn't have as much flexibility as they do now.
Yeah, that's right.
Whereas now you can buy direct shares and ETFs and lots of other things through a normal fund, but you can't pursue a strategy like that.
Yeah.
So that's where, it's a really great option for you to consider.
Yeah, definitely.
When you're a self-employed person. So it's self-managed, which means you're responsible for it yourself, but that doesn't mean you have to do it all by yourself.
No.
So, what are some of the areas where you can get advice and who might be involved in helping you through running your self-managed super fund?
Yeah, I mean, as I sort of mentioned at the start as well, so obviously an accountant is really important, one for getting it all set up, but then also every year for managing it and doing the tax returns. You have to have tax returns, financials done, they have to be audited as well, so all of that. So that's really where accountants get involved. And then, I mean, financial advisors is a really big part of it as well. So one, obviously, even beforehand, coming up with the strategy, is an SMSF the right thing for you? How does it fit for you? But then if the decision is made, yes, I want one, or we already have one, it's helping with that investment strategy for your self-managed super fund, making sure you're doing all of that right. And then obviously ongoing management of potential things that you hold within the SMSF, we can assist with that as well.
Yeah, and I think that's really important because in the example you use, which is a fantastic example, and we've got a number of clients who've pursued that strategy, it's still important to think about your investment strategy.
Yeah.
And you still want to have a diversified portfolio. You don't want to have all your eggs in one basket. We see examples of people where they have, under-diversified, and that can create risk. And sometimes that's a risk of having, too many risky assets.
Yeah.
But also sometimes we see people who have set up a self-managed super fund and rolled money into it and then not had an investment strategy, so the money's been sitting in cash for a long time.
Yes, definitely. Yeah, we've seen clients who set it up, get overwhelmed, keep it all in cash, or clients who use every single dollar they have in their SMSF basically to purchase a property, but then there's no liquidity left because you do have to fund some other things. So there's really a lot of things that you want to make sure you get right, because otherwise there can also be severe penalties on you if you're doing something wrong and not complying with the regulations.
Yeah, and that's where in a public offer fund, the trustee takes care of that, making sure that the fund is diversified and making sure there's liquidity and making sure you're adhering to all of those types of rules, where when you're doing it yourself, there's an extra step, which is where it does pay to get some advice and some guidance, particularly in the early days of setting it up, but then also advisors and accountants specialise in the ongoing management of these types of things.
Yeah, it's very important.
So as we said, very popular area that people want to understand more about self-managed super funds and think about if it's right for them. Where can they go to get some more information?
Yeah, I mean, we've got some detailed information about on it on our website as well, so you can refer to that. And then the ASIC Money Smart website is always a good resource as well. Yeah,
the Money Smart website has lots of information on a broad range of financial topics, and self-managed super fund is one. The ATO also regulates self-managed super funds, so you've got to meet those rules. So there are some rules. It's probably a little bit of a drier read if you go to the ATO website and look up self-managed super funds, but there's some information there as well.
Yeah.
But the Evalesco website has some much more user-friendly, easy to read information which we can provide to you. If you can't find it on the website, then get in touch with your advisor or Virginia, and we can get that through to you. So I think in wrapping up, for me, self-managed super funds are very popular for good reason for some people, but probably, the perception is there's a little bit more you can do with them that you can't do in other areas than what is actually the case.
Yep.
So if you're thinking about a self-managed super fund, have a chat to your advisor or get in touch with Virginia to talk through why that might be a good option for you or what other alternatives are available to you. But I think it's a good step to be paying attention and giving some very good focus to your super in any way is a good conversation to be having. So thanks, Virginia, for coming on again and sharing your wisdom.
Thank you.
And at home, thanks for listening and have a great day.
Thanks for tuning in to the Evalesco Healthy, Wealthy and Happy podcast. If you would like to learn more about anything you've heard in this episode, please give us a call on 02 9232 6800 or email admin@evalesco.com.au. Make sure to subscribe to our channel for more Evalesco podcast episodes and stay up to date by following us on Instagram and Facebook.